I came upon a concerning article titled "Kiwis are clueless, careless and deluded about money." And in this article it stated 5 major points of financial failings. And this last point about mortgage debt hits pretty close to home, and this reads: close to half of mortgage holders report feeling stressed due to financial concerns, compared to 58% of renters and 29% of mortgage-free homeowners. Personally, I think that most of the people are not like what they state in the article. I feel like it's more of a typical news headline grabbing title. But just in case anyone out there needs help with how to manage money, this video is my step-by-step guide on how I've managed my own money, just like the rich. This has been gathered from the last 5 years of my own personal experience as I take control of my financial future. Since I started buying assets and setting money aside for investments, this has now gained me over $100,000 of unrealized gains, which also includes my recent portfolio of over $35,000. Believe me, this stuff really works. Roll intro. What is up everybody, my name is Gifford and welcome to my channel where I talk about personal finance, property investing and my stock market journey as I try to figure out how to become financially free. The steps that I talk about in this video are actual steps that I've read, researched on, that rich people follow to better manage their money and in the end make money for themselves so that life can be a little bit less stressful. I've used these same steps and while basic in nature, if you follow them, these will really change your financial future. As the saying goes, a good game is easy to learn but hard to master. And just a recommendation, these steps have to be followed one by one. You can't skip from step 1 all the way to step 6. Otherwise, it doesn't work. Just before I start, I'd appreciate a thumbs up to help the channel out. And if you're interested in investing, hit subscribe. With that said, let's get on with the video. Step number 1, I would recommend creating a budget, sticking to it, and also tracking all your expenses accurately. That was a pretty jam-packed sentence. So first, let's break it down. Create a budget. The reason for this is you need to write down and know how much money is coming and arriving into your bank account. This is your income and your biggest job is to save as much money as you can from that. Because on the last step of this guide, this amount will be the amount that you grow. And the more money you have, the richer you will be. The hardest part of any budget is actually sticking to it. Some weeks are easier than others when sticking to a budget. Or worse, each week you get further behind on bills. What this does is highlight the major issues that you need to address. Otherwise, you'll stay in the same situation. You have to figure out and understand the difference between your needs and your wants. The second part is tracking your spending. You need to track every single dollar you spend. This will show the amount of money that you're wasting on random crap that you don't even need. Imagine this, for as little as saving is $30 a week, doing that for a whole year, and over 10 years, you would have $15,000 to spend on something like a car just by consistently saving that small amount each week. The goal of the budget is at the end of the week, for all your hard work, you've saved some money, and this money could be put forward to better your financial future. Now that you can follow a budget and track your expenses, it moves us to step 2, which is creating an emergency fund. I've already done a full video on this explaining and how to create one from real numbers, but I'll put a link in the description below if you're interested. But to summarize that video without any actual math, you need to build a bank account of spare cash for emergencies. With life's many problems and curveballs, a decent amount of money in case anything happens will buy you the time to think clearly of how to best handle financial situations. Having spare cash gives you the time to think clearly, like in the event of losing your job. If you lose your job and you have no extra money, you would be too stressed out to think clearly because you don't have much time. This is where an emergency fund comes in. It buys you time to better formulate a plan for your next actions, gives you weeks or months to think about because all your bills will be taken care of. That's right, all thanks to an emergency fund. Now that you have some spare money aside, that will keep you on track to make sure you follow your budget. This moves us to step 3, which I recommend to invest in Kiwisaver. For those of you outside New Zealand, this is a retirement savings plan similar to a Roth IRA or a lifetime ISA. Some people say it's a scam and some people don't invest in it because you can't access your money now. But Kiwisaver is by far one of the best investment returns you can get. It sets you up with the basics of putting money aside for your retirement and thinking long term, and with the benefits of tracking and watching it grow. To get the full benefit, you need to sign sign up with your workplace and contribute your own money, at least $1,042.86 for a period of 1 year between the 1st of July and 30th of June. In return, the government will top up your Kiwisaver account with $521.43, free every year, and your employer will also contribute 3% of your before pay tax. Now, while the scheme is used for the purpose of retirement, there are conditions that you can take out a significant amount of money out of your Kiwisaver to buy your first home. I'll put up some details of a website with further up-to-date information with the details surrounding this, as this changes along with existing and new grants on a yearly basis. The scheme is to help people better prepare for their financial future, so it's wise to be in it. This now brings me to an important fourth step, which is paying off bad debt. These things are like personal loans for items or toys for fun. This also includes hire purchases or lease loans to take money away from your weekly pay. Even a car loan for that expensive car that you really can't afford to drive. Now, the rich have a very simple formula for this. The money coming in must always be more than the money coming out, no matter what accounting tricks you do. If you're buying things that aren't needs and you cannot afford to buy it without a loan, do not buy it. Otherwise, you'll always be going backwards. Now, there's also a thing called good debt, which is debt you can service, but it also returns an income like a business or side hustle. More on good debt in step 6 and a little bit later. However, now that you're not wasting your money on bad debt, this moves me to step 5, which is investing in yourself to create an income. Now, there'll come a point you'll realize that no matter how much money you save on your weekly pay, be it 5%, 10%, or even 30%, it will not be enough. At some point, you'll need extra income if you ever to reach financial freedom. This was something I realized in my own journey, and you need extra income to be able to afford assets. You also need to spend money on learning extra skills, how to do things financially better, which is done by doing paid courses or services. And some courses don't need to cost you thousands of dollars, and some only cost a few $100s if you're willing to learn. Also available are free courses online to try before you pay your hard-earned cash. For myself, I did a course worth less than $1,000 to learn a skill that later returned over $10,000 a year, along with some hard work. Even for YouTube, I paid less than $100 just for a short course to understand the basics. Invest in yourself, upskill to what you're comfortable with, and earn additional income each week to really fast track your savings. Be very aware that additional income comes with working more hours, and this will really mean working over the traditional 40 hours until you have capital to start building your wealth. Now, on to the last and hardest step of the guide, which is buying only assets. Now, this step is a really important one. You really want to pay attention, and it is the very most difficult one to do. Not because it's the last step out of the whole guide, but that's because in order to have a chance at this, you needed to go through the other steps beforehand. And this is the one that really fast tracks your financial freedom. Assets are things that generate passive income, and liabilities are things that do not generate any money, but instead take money away from you each week. It doesn't get as basic as this. If I buy this item, will it make me more money? If it doesn't make you any more money, then do not buy the item, because this doesn't grow your wealth. It's as simple as that. Once you start to generate additional income from the previous step, the typical and popular path in New Zealand is buying an investment or rental property. This is the way I decided to go because I had access to people who were doing this already. So the risk to me was reduced, and most importantly, I knew that it worked and it wasn't a scam. And if there was any issues at all, I could always get some free advice from people I regarded as trustworthy. With mortgage lending, you start to use leverage, which is basically just using the bank's money, who the bank gets off from other people. This is then used to buy a property that you can then go rent out for higher costs than your expenses, therefore generating you income every week if done right. This additional income can then grow to even larger amounts every few years in the form of home equity, which is where your house prices rise due to demand. House prices typically go up over time, but there will be some stages where they go up and then they sort of flatline across and then they go up again. This ranges over in decades, involving a wide range of complicated situations. But this aside, nothing remains true that if you buy a property and hold it for a long time, it will make you money. Another popular asset to invest in is the stock market. Now, this is something that is very new to me, but the concept is still the same. Buy and pay for something now. In this case, a stock in a company to hold, and over long term, if that company does well, it will grow in value. This last step is what the rich people do over and over again to increase their net wealth, to the point that it makes them so much money via investing in assets it eventually pays for their yearly expenses, and via passive income, this is how they keep getting richer. Now these steps, starting from the humble beginning of budgeting to tracking expenses, to then building an emergency fund that helps you keep on the right track of the financial path, to then learn the habit of investing in the form of a Kiwisaver, which then gives you good money management to pay off all your bad debts. This in turn will then free up money to invest in yourself to create an additional income. This then leads to the last and most important step, which is to start buying and investing in assets to start growing your net wealth. Well, that was a lot to say, but I assure you that over these last 3 years, I've been following these steps, and there's no doubt in my mind it is changing and transforming my own financial situation every week by following the plan of how the rich manage their money. If you've made it this far, thank you for watching. I really do appreciate it. If you're interested to follow more investing content from a normal guy like me and also follow my stock market journey, don't forget to hit subscribe. Also hit the like button, as it really helps the channel out. Now I work full time, so if you want to see more of me, feel free to add me on Instagram, Gifford1million. I post there a few times a week. Thanks again for watching, and I really do hope you find this video helpful. I assure you that if you follow the steps in this guide, they really will help your financial future. With that said, I'll see you on the next video. Goodbye.